Hello and welcome to Banking Transformed, the top podcast in retail banking. I'm your host, Jim Marous, founder and CEO of the Digital Banking Report and co-publisher of the Financial Brand. 2 years ago, we introduced you to the Debbie app, an innovative rewards platform aimed at improving financial wellness and helping people understand how they're using credit. Now we're excited to welcome back Frida Leibowitz, one of Debbie's co-founders, to discuss their journey since our last conversation. In a world where economic uncertainty has become the norm, Debbie's mission to transform borrowers into wealth builders has never been more crucial. We'll explore how the platform has evolved, the challenges they're facing, and the impact they've made on users' financial lives. Join us as we delve into Debbie's growth story, their adaptive strategy, and their vision for the future of financial wellness. Over the past 2 years, the Debbie app's founders have refined their approach to financial wellness, adapting to economic uncertainties while staying true to their core mission of empowering users to overcome debt and build wealth. The app's growth has been accelerated by industry partners and the increasing need for consumers to manage finances better. I met our guest at Finovate event in New York City in 2022, where Debbie received the Best of Show designation. So before we start, can you share a little bit about your background, Frida, and how you adopted your platform to help users navigate today's financial uncertainty?
Yeah, absolutely. And thank you for having me. But it's funny. Like every time I say my personal story, I feel like I have to do a different twist on it because I've repeated it so many times. But it's kind of therapeutic. I say that, me building Debbie is a very long-winded and difficult way of fixing my childhood traumas. So, we're getting there. But for me, as we were just talking about, came to this country as 10 years old from Israel, came with a single mom who was not college educated, who wanted to come here, give her kids a better future. And she had a hair salon, just kind of working. She was very smart, very hardworking. But we very quickly fell into a terrible cycle of poor financial decisions. And I think that we talk a lot in the last decade. I can't tell you how many times I've heard pitches around, let's give people more access to credit, and all these poor people and immigrants and low-income people, they need more access to credit. I have not seen any other country in the world where credit is more accessible. I'm not saying it's easy to access. I'm saying there are definitely areas where we need more, but the areas that I've seen expand are not the areas where consumers need. Giving consumers access to buy now, pay later so they can buy a larger TV and a Peloton and go on vacation, that's not the kind of access to credit that they need. And unfortunately, that's the kind of access to credit that's hurting them a lot. Yep. And when I say them, I mean us, because I've been in the same exact place. And so I really saw how this cycle of, every time you walk into a Macy's, Walmart, Target, you're using credit, you're being incentivized, right? You're actually getting 20% off your purchase today if you just open up the store card, and then you could take all this nice stuff home without paying for it out of pocket. And it becomes intoxicating until it's really, really not. And so I got to see how that cycle turned out pretty badly. And you end up paying, 3 times the price for everything because you're paying with interest. You don't have, enough money left at the end of the month to put into savings. Eventually, I was super lucky. I got a scholarship to go to NYU, study finance, of all things. I myself fell into the exact same trap. And this is where I like to kind of point out how the whole thing that we've been taught around financial literacy, right? Because when we talk about financial insecurity and financial instability, the fintech side and the banking side, they all like to talk about financial literacy. Oh, it's because the people aren't literate. They don't understand how interest works. As I said at the Reseda Summit, that's BS. That's BS. Yeah. And because you could know how many calories are in a cookie, you could know it's bad for you. And consumers do know. They know it's bad for them. They're still going to eat the cookie. I knew that I shouldn't spend more money than I earn. I knew that I didn't have the money for that larger TV. But when you build an environment where all the incentives in our financial systems are on spending, behavioral economics 101, we just follow incentives. That's how our brain works. And the clearer the incentive is, the sooner it is in the timeline, the more I'm going to follow that incentive, right? And so
Yep.
I think that realization for me, being a graduate of one of the top business schools in the country, being very financially literate, still going into $15,000 in credit card debt and going through that cycle, I understood, okay, something here isn't working. And so, yeah, I had spent a bunch of time. First, I tried to join the industry, right? Tried to do it from within. So I spent a few years at Marcus by Goldman Sachs, so very early days, building consumer debt consolidation loans and other credit products. Eventually, still realized that we were just building different wrappers around the same problem and band-aid solutions, but the incentive system wasn't changing. And that's really where the seed for Debbie was planted. I started venting to my now co-founder, Rachel, who was my best friend from college, and we'd lived together during college and after. And we really thought about, okay, how can we change the game by changing the incentives? And that's really what Debbie became, is that incentive structure for good financial habits.
You said so much there. I think one of the things that resonates with me, and I remember this 2 years ago when we discussed it, is that I had a good job. I came from a good family. We were good, solid, middle-class people. But it was only when I woke up one day and realized I was owing more monthly in credit card payments than I was making. And I was no dummy. As you said, I knew what the damage could be, but it was so easy. And you continually want to internally either want to show what you've done, show what you've accomplished before you should. And I think the one thing that's really interesting about Debbie, as opposed to a traditional credit card reward, which really simply incentivizes you spending more, your incentives really are about getting better. We're going to give you the tools, and we're going to give you an offsetting reward for making better decisions that you have to make. It's interesting. Since our interview 2 years ago, how has your user base and the impact that you have changed? Can you share some metrics or key success stories?
Absolutely. Wow, it's changed a lot. And I think that, when we started this, one of the best advice I got as a young founder was stay married to the problem, not the solution. And I think that's exactly what we've done. Yeah. We always knew what the issue was. We understood the core. And when I say the issue, I don't mean people are in debt. People are in debt is a very large overarching. There's a lot of different reasons why people are in debt, but we really focused on this idea of people are making poor financial choices. That is the problem we set out to solve. And we understood that it has to come with some sort of better incentive structure, right? So that was always it. But we really tried to make this more and more universal and create a platform that can apply to any other good financial decision. So whether that's paying off debt or adding money to your savings account or reducing spend in certain categories, right? All of those things. And we more and more turn this into what I call like a reversed credit card rewards program, because it's essentially, right, like you said, it's points based on transactions, but for good financial transactions, right? So as opposed to getting points when you're spending, you're getting points when you're paying down debt, adding money to savings, reducing spend in certain categories, et cetera. And I think what that has done in terms of impact has been incredible. We really also leverage this power of the Atomic Habits. Basically, Marco and I both love that book, and we said we don't need consumers.
It's my favorite reread. It's what I listen to on the dog walks over and over again, because there's so many tidbits, not just from a personal basis, but from a business basis that make a lot of sense.
Absolutely, absolutely. And I think that at the base of it, the whole book revolves around this idea of start small. You don't need to get consumers to have a monthly budget. A monthly budget's too big. Even a weekly budget's too big. One transaction. So I think a lot of the realization and the evolution of the product was everything that we do needs to be revolved around one action. And it could be as small as it is. A $5 debt payment should get rewarded. A $5 money to your savings account should get rewarded. And that's really what starts creating an amazing flywheel. And then consumers start, you start getting this like instant gratification, the little dopamine rush every time you're getting W points in real time. And that's how we've been able to get to a place where our users are 30% less likely to miss a payment. And that's when you compare. So we've looked at the data. We basically took the user set. Every user that comes in will link their accounts. And when they link their accounts via Plaid, we actually get 2 years worth of transaction history. So we can see how many, on average per quarter, how many missed late payment fees did they get before Debbie versus after. And that's what we see a 30% decline. Wow. Huge. Just talk about how much money consumers are saving. And on the other side, we also saw users start to put around $100 on average per month in their savings account. And that's huge for people who have not saved anything, right? And who are making on average between 40 to 60K a year. It's very much, like I was even lower middle class, and they're able to put that $100. Whereas when they came to Debbie, they were not putting any money into their savings account. And so I think that has really been incredible to see. The other really amazing thing, and this one we could not have done without our credit union industry partners, is that we're able to also help them access these amazing products that they've never heard of. Many of our users have never heard of a credit union. They don't know what a credit union is. They don't know that it exists. And all of a sudden, when they're joining Community Financial and they can get a 10% APY emergency fund account for up to $1,000, that's wild. That's great. Like, that's something that they're so excited by. And then, the other hand, also on the debt payoff side, we've been able to slash our users' interest rates in half via, debt consolidation loans from our credit union partners. And these rates are not something that you can access elsewhere. And I think being able to open up this very opaque market, it's so crazy because it's like watching two blind parties trying to find each other. Credit unions are out there doing the thing, walking around trying to find consumers. And consumers are out there like, help me. I need access to better products. The banks are killing me with the fees. And they're not finding each other. And I think that we kind of see ourselves as like shedding light on the whole thing and helping to build a bridge, because at the end of the day, consumers need credit unions and credit unions need consumers. So,
it's interesting. You talk about those partnerships, which actually has evolved quite a bit over the last 2 years since we last talked. What are some of the new features and partnerships that have really significantly enhanced your offering, Debbie's offering, since our last conversation?
Wow, so much. So I think also when we, until early 2024, we weren't even we had a wait list for Debbie. You couldn't even join Debbie because we had, our first two credit union partners, they were not able to support everyone. And then we just started getting slammed with signups. Users really wanted access to this rewards program, and we were not necessarily working with a financial institution in their area. And so I think one of the biggest things is bringing on more partners. So bringing on folks like University Federal Credit Union out in Texas, bringing on Community Financial Credit Union, Elga, right? So really bringing on some additional partners to create more room for users to be able to access. And we're still working on many, many more. We have, if you're a credit union listening to this, we have so many users to offload who are still waiting for a financial institution partner in their area. So I think there's, that has been really incredible. And then on the feature side, I think it keeps coming down to the same theme. And this is something that we're going to keep working at, which is what is the smallest action that can become a catalyst for something bigger that we can get you to take on every part of your financial life. And that is something that we're doing a lot of research on. We've got an incredible data set today of not just, traditional credit reports, but also real-time transaction behavior on, like, at this point, thousands and thousands of accounts. And we also have actual engagement behavior. We see when a user comes in, we see what they're doing on the app. We see how they're engaging. We see the content they're engaging with. And we can tie all of that together to come up with learnings on how to help consumers help themselves, basically, and build those better behaviors.
You also just worked on a deal for onboarding, helping the onboarding process overall. Can you tell us a little bit about that?
Absolutely. So, and this is part of like the whole, like the two blind parties kind of situation, right? Where what's happening today is that applying to become a member of a credit union, in most cases that I've seen, it's more difficult than opening up a checking account at a neobank, right? It's just a lot harder. There's more information that they need from you. It's tougher. And it's worth it. It's 100% worth it. But we have to we set out to create an experience where a user can see, okay, there's a clear carrot and I'm getting help and I'm getting the coaching that I need to actually be able to join the credit union, right? And so what we've done with Debbie is, as you know, Debbie is a rewards program that's free to consumer as long as you are working with one of our partner financial institutions, so one of our credit unions. If you're not currently working with one of our credit unions, we'll route you or we'll match you with one and we'll help you open up the account. And us being able to we were able to actually do integrations where inside of the Debbie flow, when you're signing up for this free rewards program, a membership application is automatically created for you already with the credit union that we matched you with. And that's actually going to be that you're going to have a checking account, potentially a savings account. And that's where all of your debit rewards are going to start being funneled into, right? When you actually are able to cash out your rewards, they'll go into there. That piece of building an embedded account opening flow, first of all, it tremendously increased the conversion rate. We more than 2x the conversion rate to be able to get consumers to actually complete their application and get it done. But it's also just created a much smoother experience where now consumers, they're learning about this amazing rewards program. They're like, oh, there's an amazing credit union in my area, ideally, who's able to sponsor these rewards for me. They're interested in investing in my financial health and building a relationship with me. And by the way, with just clicking a couple buttons, I can already, apply to become a member of this credit union. And I think that has been game changing.
You simplified the process. You've made it easier to work with you, which, we forget about that. And, your comment about doubling the number of accounts that are actually opened, that's what we see industry wide, that if you fix the account opening process, if you bring it down from what is traditionally 12 to 15 minutes down to 3 to 5 minutes, that can be done with some of these really good APIs, these programs you work with, it helps everybody. It's, as you mentioned, it's one of these blind on the street. Well, you now have a win-win-win. You have a win with the onboarding partner. You have a win for the financial institution. You have a win for Debbie and obviously the consumer. But it works really well there. You mentioned about the rewards program. Have you made any changes to your reward system based on user feedback or behavioral insights over the last 2 years?
Yeah, absolutely. So like I said, we are, and this is actually happening real time. So you're hearing this, you're one of the first to hear this, and it's going to be released hopefully in the next few months, is we're moving more and more to structure this very similar to a credit card rewards model where it's transaction based and the points actually equal the amount of the transaction, and we have different categories. And that is really, we're moving to that system in order to be able to be very nimble, be able to move quickly, test different things. Yep. And also be able to, again, reward the smallest, tiniest behavior that you might be taking, create each one of those things into a powerful experience. The other thing that this allows us to do, which I'm very excited for, is also be able to build more loyalty for our credit union partners. So one of the things that we're going to do with this reward system is start having multipliers. Just like with credit card points, you can earn, 2x or 3x or 5x even in certain categories. We're doing something very similar for the credit unions. For example, we'll say to a user, hey, we see that you're putting $100 a month in your Chase savings account. You're earning a low yield on that, and you're getting 1x Debbie points for every dollar that you're putting in that account. If you put it into your community financial credit union account, you'll get 2x points per dollar, and you'll earn a much higher yield, right? And then that's when you start taking an existing behavior and create a very clear incentive. I move my savings, my direct deposit or whatever it is, my monthly savings contribution to this account, and I will get more points. And those points are, they actually have value. And I think that is something that we're very, very excited to see. We already did a small test around during the last tax filing season when people are getting their tax refunds. We tested out. We had users. We said, hey, we see that your tax refund landed in your account. We were able to detect that. If you move that money to your regular savings account, whatever you were using before, you'll get 1x points. It's still good. You'll earn some points. If you put that into your credit union account, you get 2x points. And with that small test, which is a one-time campaign, 67% of the users chose to move their tax refund into their credit union account. A new relationship that has just been established, but something that they were willing to now, it was a very clear, I'm going to move this, $2,000, $3,000 of my tax refund, and I'm going to be able to get a lot of points for this. And so I think that is something that I'm super, super excited to see how we can use this new rewards model to do many different and interesting things, both for consumers and credit unions. Well,
and it's not just about the credit card debt now. It's about the overall financial wellness thing. You mentioned about the savings aspect, and it's strange. I'm an old man. It's not too much of a surprise for anybody on the podcast. But the reality is my very first meaningful savings account has happened in the last 5 years, where I started embedding a lot of automatic transfers for Acorns. And I started seeing like a real savings account, one that I've actually taken out of because it was getting substantial enough that I found uses for some of that savings, but I had never had it. It was always a cash flow deal. I had money. It was just not anywhere that was resembling a savings account. It was the lack of debt, or it was a checking account that was overbalanced. And the reality is the feeling you feel, the confidence you feel, the comfort level of saying, geez, if something happens, I can respond to it quickly, which Lord knows over the last 4 years, we've seen a lot of things happen that impact it. And especially, and I keep on referring to our very first conversation, that it's not just people that are on the lower end of the financial scale. It's really those people that are in the lower middle or even higher end, because it's not like we spend like we should. We spend like we want, which is a lot different. So a lot of the things you've discussed today have really been extraordinarily positive. But startups and companies like yours have challenges. What's been your most significant challenge over the last 4 years, 2 years?
Wow. Oh, yeah. 4 years ago, well, we weren't born, so
we can start from there. Exactly.
But I think that actually, like, the thing that keeps me up at night the most, and the thing that I think as a credit union adjacent company, and I think we see ourselves very much embedded in this industry now and want to grow with the industry. Like I said, we're watching a very incredible yet painful growth process happen. And that growth process, it's a challenge. It's a challenge that we'll need to partner together, credit unions and fintechs, to figure out how to solve. For most credit unions that we work with, we are the first digital channel at scale that's funneling deposit accounts, that's creating deposit accounts. They really haven't done it. They're not working with Bankrate and NerdWallet and whatever it is, right? They don't have that for deposit accounts. And so I think that we were ready to go. We're startups, so we're like growing fast. And we started sending, at some point, like one of our partners, we were sending them 1,000 leads a month to open up accounts. So 1,000 potentially new members, right? And we started seeing all of a sudden the credit unions realized, oh, like this dream that we wanted is so attainable. So on the one hand, they were very excited, but on the other hand, they started getting really scared and we started having a lot of issues. And then they get extremely risk averse on the fraud policy. Now, acquiring a consumer inside of your branch is not going to look like acquiring a consumer online for many, many reasons. One is the process, the most obvious ones, but also the type of consumer who's going to come to a branch and the type of consumer who's going to come to you online are going to look very different. And we all know, we've been taught from a young age, the internet is a dangerous place. There are a lot of different people hanging out on the internet. And so you have to know how to fit. If you want your organization to have that kind of presence and be there and and also be able to access all the amazing people who are on the internet, you also need to understand that there's going to be players and know how to be able to take some risk, right? Be open to some risk, but also know how to, right, over time work through things. I'll give you a perfect example of something that happened to us that I was like, okay, there's some work that needs to be done here. One of our partners, and they were one of the earliest ones, we had started sending leads and they had great rates on their deposit accounts and our users were loving it. And one of our users loved it so much that they went on Reddit and posted about Debbie and how great it is and about this account that they got and whatnot, right? And they were so excited. Next thing we know, that credit union's getting a wave of like all these super weird applications coming online because who knows who's hanging out on Reddit, right? And they freaked out. They were like, oh my God, what do we do? And we didn't even know. We had to dig in because we didn't even realize that this happened, right? We were like, we're not sending you these leads. We don't know where they're coming from. And then ultimately we did some digging, some Googling, figuring it out and saw this Reddit thread. And then I had to like really calm them down and say, look guys, like this is what happens when you are on the internet. Lots of different people are going to find you and this is okay. And this is normal. And we could just, right, like let's walk through it and figure out how to be smarter about it. And so I think these are the things that credit unions, like they really want to grow. And then like any other growth process, once growth is happening and all of a sudden there are different side effects to this growth, you have to be able to stay calm throughout, work together to figure things out. So yeah, I would say right now it's really figuring out those little kinks and understanding, okay, when you start having a really large online presence, how do you work together as a fintech and a credit union to be a place that is open to the right people, but protective enough so that the wrong people don't come through.
It's interesting that your biggest challenge is being able to handle growth. And one thing that we've seen in the credit union space, in the community banking space, and in the fintech space is a higher and higher level of co-collaboration where both parties realize we're going to be having some rough spots here. We're going to have some gravel road instead of a perfectly paved road. And we've got to have patience for each other. But what it comes down to is trust. Trust in your partner on both sides. The ability to actually leverage that trust to say, we're co-collaborating, but the end result is going to be so good, it's worth some of these growing pains. And that it's not always going to be put all together in a nice package, because if you wait that long, it's often too late. So, Frida, how do you measure success around customer experience, level of engagement, and content delivery?
Wow. I think in terms of measuring success, there are the obvious things, right? Which is retention, users coming back to the app. We're very lucky that, and very, very thankful. Our users they get quite hooked. So I think by month 12, 60% of them are still using the app regularly. And that's huge for an app that's dealing with your money. But I think bigger than that for us, like I said, from very early days, and maybe because for us, this was very also a personal, definitely personal agenda and a mission to fix the issue around financial wellness. We really measure the success of our users by what percentage of them are paying off debt, like net reducing their debt and net increasing their savings. And by the way, each one of our credit union partners gets a monthly report with that number for their membership. So they will see, hey, since starting with Debbie, X% of your members have reduced their debt by X amount, and Y% of your members have increased their savings by this amount. And that's really important, because at the end of the day, we want to measure, okay, is this working? Are we getting people there? And this is also something that I think the first wave of financial wellness really wasn't able to capture. Like, we were doing all this, like financial literacy, as you know, my favorite thing. And we were teaching people things, and we were showing them charts and all these, personal finance management apps were giving you these tools. But then the thing was, are we making a difference? Did we know? Are people making better decisions? Are they getting from point A to B? That was very hard to measure. And so for us, it was very important to build that in from day one, where the users have stats. Each one of our users also gets a monthly report, their personalized report, where they can see for the month that just passed and from the time that they joined Debbie, what is the net change? The other really important thing from a behavioral psychology perspective with this is, I think that when you look at the traditional, personal finance management apps and even the Credit Karmas of the world, it's kind of like more of a bathtub, right? They'll just show you some time frame. There's no beginning or an end. There's no clear, what is my next goal? Where am I reaching? And as a person, you're just like, okay, my credit score increased, my credit score decreased. My savings increased, my savings decreased. But there isn't, it's just like on a monthly basis. But people also like to see over time, and there needs to be a clear starting point. So for us, with our users, we establish our starting point is the day they joined Debbie, the day they started this journey, and we make that into like a big deal. And everything from that point forward, both for them and for the credit union, is tied to that moment. And we keep showing them, okay, we level set, this is where you started, and now here's how much you've paid off. Here's how much savings you've added. Here's where you've been able to reduce spend in certain categories. And I think that has been really powerful and helpful for us to be able to measure our success.
It's interesting. We talk to a lot of solution providers, and one of the biggest challenges sometimes is you may have a great solution, but you haven't helped your partners deploy it or getting results back for what's going on. I often talk to solution providers and say, guys, if you're not providing those capabilities to actually take them all the way into the deployment phase, because while it seems to make all the sense in the world, give it to them, they'll use it. It's not often used. And the results, if you don't get measurement of results, then at some point you're going to become a cost or an expense as opposed to a revenue source. And the fact that you provide these solutions, these reports, everything else to show how have you done helps in the deployment stage. Before the break, we talked about the challenges that Debbie has faced over the last 2 years. What are the biggest challenges you see your financial institutions that you meet with? I'm not going to say your clients because they're perfect, but let's say those organizations that you are out there trying to sell. What are the biggest challenges that they have in working with a company like Debbie?
Wow. Okay, I'll point. This is going to go back to one of those like typical. Whenever you look at on a personal level, as human beings, we always say like the biggest blocker to our own success is ourselves. Usually, we are our own biggest
Worst
enemies in
yeah.
those, right?
Yeah.
We're the ones that make it difficult for ourselves. And I think that there are a lot of things contributing to the fact that credit unions might be struggling in certain areas, right? There are a lot of things in the economy, in the market, and even in on the legal front. So many things there. And then there's, of course, they'll all talk about the NCUA and how they're cracking down on them and giving them a hard time. A lot of different things. But at the end of the day, I keep seeing over and over again, the only ones that could really help credit unions get better is credit unions themselves. Like they really need to help them. And I think within that, there's one thing that I'm really, I'm on a little, also on a little mission to fix is the problem is not, and we've already seen that a lot of the executives on the executive and board level, those men and women are going out there to the conferences, they're getting hyped up, they're excited, they want to adopt technology, they want to do certain things. So many of them will even get on board. I think it used to be that, that part was more difficult, but actually what I'm seeing now from a lot of organizations, the top of the organization is very bought in. They also are the ones that are signing deals with us, with other companies, they're ready to go. But what starts happening is they'll sign the deal and then they'll just pass it off to their team. And there is a layer of middle management in the credit union space that they're not the ones going to conferences. They haven't gone through this transformation. They don't understand. And they are just getting bombarded from the top. They're just inheriting. Okay, we just signed a partner, Debbie, go forth and prosper and figure this out and go actually build it. And they're also in many, many cases a little powerless. They don't have decision-making power in what technology the credit union is adopting. They don't have decision-making power in how that technology is going to be used. And I think that's very difficult. As an organization, when you want to create change, and I know this is even for us, right, with big things, there does need to be like a more holistic and kind of an approach where the more stakeholders are going to be part of the decision, or at the very least, once the decision has been made, brought in a little earlier and given the power to make changes. The other thing is that oftentimes I'll see people at middle management, they have to ask for permission for everything. They want, like, any meeting they want to get on the calendar, any little risk decision they need to make. They have no independence. And I don't blame, and so when we come to them and we're like, okay, we need X, Y, and Z, we need to, we need access to this flow, that flow, and they can't give us access to certain things, or they need to ask for permission and go through many, many layers. And I get it. Then they get frustrated, and we get frustrated together with them because it's very hard to get moving that way. Yeah. And so I really think that the key here, one of the biggest things that can help innovation accelerate tremendously, is thinking about how to position middle level management and all the foot soldiers on the ground that are working with us on the day. These are my real partners at the end of the day. Like, my partner is not the CEO of the credit union, as great as they are. And as much as I love talking theory with them, I need the manager of innovation, their manager, their marketing manager, their whoever else is, right. Those are the people I need with me. And I need those people to have the right power and the right to feel empowered to be able to make certain decisions and move on certain things. And so, yeah,
that is so key, Frida, because we see it over and over again. We talk about in this podcast all the time that unless you have a person or level of an organization that's willing to do things differently, because the implementation of your project is going to be put upon them, and it's going to change the way they currently do things. So you have to actually say, I'm willing to do things differently, which seems logical, but it's very hard to implement. The other thing we find is human nature says, I want to take any kind of friction out of the way of me implementing this because it'll take me less time. So I'm not going to include compliance right now. I'm not going to include this area right now. I'm not going to include this area right now. Unless you get them all on the front end and have them all buy into the end journey, you aren't going to get there, because everyone's going to have a reason for not doing what you want to do in the way you want to do it. You see this with the onboarding process. If you're not going to change the things you answer for the know your customer, you're not going to get to a better plan, a better way of implementing and onboarding consumers. So it's crazy, but you're right. The biggest challenge to digital transformation is the banker themselves, because we get in our own way. So when you look at what's gone on over the last several years. What is your vision as you look forward? What excites you about what's coming up with Debbie or with the marketplace that's really going to make banking better?
Yeah, I think this is really first of all, Debbie, in terms of like who I want us to become one day, it's like I joke, I want us to be like a Noom, Credit Karma, and Built Rewards had a baby, right? This idea of being a marketplace where you're going to find great deals, at the same time being a place where you could work on any financial habit that you want to build and get rewarded in the process and have this really exciting component to it right around the rewards. So I think that's something that we want to be there for any consumer, for every financial milestone they want to hit. If you have a really big financial goal and you're like, I have no idea how I'm going to get to this goal because it's far and it's big and I don't want to know where to start, you come to Debbie. You get started and you have a motivating journey to get there. I think the other really, really big thing, and this is where we're as a company making a huge bet in the credit union industry. And by the way, I cannot even tell you how many times like VCs, because we're a venture-backed company, and you should know it's very tough as a startup. But when we made that decision to go after credit unions, that counted out many, like we basically automatically excluded many VCs from potentials for us because VCs don't understand the credit union space. They don't see the potential. They're looking at the numbers, they're looking at this industry, and they're like, I wouldn't, this is not going to get us. They think that we hear this all the time, like this isn't going to create a venture scale outcome. And that's where I really want to challenge that. And we're on a mission to change that because I do think credit unions can be on the map. They can do so much more than they're currently doing. They can reach so many more consumers. And the reason why I believe that is not just because I believe credit unions are great. It's because I see the demand on the other side. It's like I was telling you, like it's like watching huge demand from the consumer side and then huge demand on the credit union side and just seeing how the bridge is just not there. But I do really think that there could be a very interesting wave of bringing back credit unions and putting them back on the map and making credit unions this kind of, like I said in one of the articles that I wrote, like the craft beer of banking. And everybody loves craft beer. That craft beer made such a huge wave over the last couple of years. Why can't we do the same thing with financial services, right? With the craft beer of financial services. This is a much more personalized, hands-on, consumer-friendly option. There's no reason why we shouldn't be able to make credit unions cool again. No pun intended.
No.
Or maybe intended.
Final question. What recommendations do you have for financial institutions? Every one of them is trying to make it better for their members. Every one of them wants to come back and justifiably own a greater percentage of what's happening rather than have their members go elsewhere for services. If you were in charge of a small financial institution, a credit union today, what would be the first thing that you'd say you need to do to make it so you can go along this journey?
Again, I'm probably biased, but think just about incentives and where they are and how do I build a program, an organization where the incentives are in the right places and it's a win-win situation for everyone involved, right? I think you also need to really put yourself in the consumer shoes. Don't sit in your shoes and think about what you think people should be doing, right? Because that's where we run into the cycle of like this financial literacy, babble and, we need to educate the people. But that's not you being in someone's shoes, understanding, okay, I'm making $40K a year. I have a family to feed. I have these kinds of things to do. I want to have nice stuff. I want to access these nice things. Like I'm not making poor financial decisions because I don't understand. I'm making them because I want to buy my kids this nice thing that I can't afford to buy them. Right? Like once you are in that place and you understand it and you understand, okay, I have a set of incentives in front of me and right now they're not great. So I think thinking about that, that's what I would do. And part of that, and this is part of what we're trying to also do, is think about bundling, right? In the last decade, we've seen a huge unbundling wave of financial services. It used to be that you had one or two banking relationships and everything you had was within those two relationships or one relationship or whatever it is, right? That's not the case anymore. Like you just said before, you can have an Acorns account and you can have your other primary financial institutions and you can have your mortgage one place and your auto loan another place and your investment somewhere else and your high yield savings account somewhere else. And it's so easy to open up accounts now. There's no real barrier. There's no reason why you're not going to go find the best deal.
And so most of them are easier than in your organization, which is
Absolutely.
big
They're
bugaboo. Yeah,
easier.
exactly.
And there's no compounding effect of like a benefit. There's no compounding benefit of why I should keep banking just with you, right? That relationship that we have, that I have with my financial institution isn't really getting me anything. They're not giving me a better deal than they're giving the next person who just walked in and never had a relationship with them. So if you're not going to give me that benefit of the relationship, we're both going to lose. And so I think creating more bundling financial services, again, like rebundling them and thinking about creating compounding incentives will be really interesting. Again, we're really helping do that with the multipliers. So basically, like if you are joining Debbie through MSUFCU, for example, you will earn higher and higher multipliers every month the more products you take in the marketplace with MSUFCU. So then it becomes interesting because the more products you have under one umbrella, the higher your monthly rewards rate is. So things like that, I think, are really, really important to think about when you're thinking about building a financial services at scale that you want to grow with your customers.
Frida, it's great to have you on the show. I realized as we were halfway through this podcast that we don't have many revisits with fintechs that have new ideas that succeeded that make a great interview 2 years later. Congratulations. I don't want to ever take this for granted. I know you don't take it for granted because you're working it every day. But the reality is the chances of failure in this industry are so much greater than the chances of success, especially looking at where we've been in the last 2-3 years, the ability to get money, to be a startup that's run by women to get money. I'm sorry. Let's not fake it that it's easier. No, it's harder.
No, we're under 2%. We get under 2% of VC money, and we're 20% of the founders. So
and knowing your firm and knowing the co-founders, your ability to say no when it's not right. That's really hard when, yes, it's the answer you really need. But you said it before on the VC front. There are times when you're saying it's not the people we need to partner with. And congratulations. The growth of your platform is really exciting. And what you're doing in the marketplace is really exciting. And it really is clear that your vision and the vision of community financial institutions are equal. They're right along the same line. What you're trying to achieve is what they're trying to achieve. So I wish you all the luck in the world. I don't think I'm going to wait 2 years to see what you're doing because you have so many things going on right now, both already announced and things you're going to be doing. It's going to be really interesting to see that when you catch up to yourselves, what the expansion can really be. So thank you very much for being on the show today.
Yeah, thank you so much for having me. This was fun.
Thanks for listening to Banking Transformed, the winner of 3 international awards for podcast excellence. If you enjoyed today's interview, please take some time to give our show a review on one of your podcast apps. Also, be sure to catch my recent articles on the financial brand and the research we're doing for the Digital Banking Report. This has been a production of Evergreen Podcasts. A special thank you to our senior producer, Leah Haslage, audio engineer, Chris Fafalius, and video producer, Will Pritz. I'm your host, Jim Marous. Until next time, remember, rewarding consumers for making smart financial decisions can be the key to customer engagement and loyalty.